Okay, and we are live. Good morning, good afternoon, good evening, good day. Just depends on where you are and when you are listening to this broadcast. Welcome, welcome, welcome. My name is Clara Lyons-DeVaughn. I am the broker owner of Lyons View Realty. We provide residential, commercial for small businesses and nonprofits, and property management services. Here at Lions View Realty, we are committed to ensuring you have the resources, the information, and the tips to assist you in making the best financial decisions. On Financial Fridays, we want you to maximize your wealth building power now and in the future. Financial Fridays helps you stay current on those trends that impact your bottom line. So you can tune in live on YouTube or Facebook Fridays at 9:30 a.m. Eastern Standard Time. Feel free to share and subscribe to my channels on YouTube and on Facebook. Everything is at Clara Lyons-DeVaughn, and you can catch the replay anytime. There's a lot of content on the YouTube channel that really will help you in your home buying process, in your financial process, in your intellectual wealth process. So I'm really, really glad that you joined us today. Make sure you share this because I have a really, really exciting guest this morning. Um, Good morning, Miss Balde. How are you?
Well, good morning, Clara. I'm good. How are you this morning?
Oh, I am excellent, excellent. I met Miss Balde at one of our workshops, our homebuyer workshops, where she presented information for our first-time homebuyers. Miss Balde has been in the mortgage industry for over 10 years. She's knowledgeable in all aspects of purchase and refinancing for residential mortgage transactions. She is proud to speak multiple languages. Additionally, she is an Army veteran and brings a strong dedication and commitment to her role. So, as a CRA Account Executive, and we'll get into what that means in a minute, she is focused on helping those in the broader Camden community and South Jersey area achieve their dream of home ownership. And she looks forward to being a trusted advisor to her clients. So I just want to welcome you, Ms. Balde.
Well, thank you very much. Thank you, Clara, for having me. Really
Awesome.
appreciate it. Yes.
Awesome. So, wow, how did you come to do multiple languages? Tell us a little bit about yourself and let's.
Yes. Thank you. So, my name is Mariama Balde. I am originally from Senegal, in West Africa. So, um, that's in Senegal we speak French and many other dialects. I just happen to speak uh, Wolof, which is what my one dialect that my mom speaks, and then Pulaar. It's called Fulani as well. That's my dad's language. So I speak both languages and French, which is just the administration language. So that's what we speak in school in the administration. So that's how I became a multilingual. And then I came to the US when I was about maybe 17, 18. Then have to learn English, from from the ground up. So, after that, came here a year later, joined the military because that's just what, I always loved the uniform because I had, my parents, my uncle, most of them were serving in the military. So when I came here, I was like, okay, yeah. So, and I was always kind of manly. I'm like, okay, let me join the army and see how that came about. So you know, that's how I arrived here. And then, learned the English language and joined the army. Then went to school, and now, doing mortgages, which I love and love to do.
And you're very good at, well, bonjour, comment allez-vous, and
Bonjour.
bienvenue.
Oh, wow. Merci beaucoup. Bonjour à toi aussi, Clara.
Oh, merci, merci. And bien, thank you.
Oh, yeah. I see the French accent a little bit. That's good.
Yeah, I actually took French in high school. That was
Oh,
my language of choice, and I had a
yeah.
really great teacher. And I have had also the opportunity to go to Senegal.
Oh, you
So
did? Yeah, that's
yeah,
awesome.
for a brief, very brief moment.
Mm-hmm.
Yeah, but it was awesome. I had a great time
Oh,
while
that's very nice. Yeah,
yeah,
I'm glad you liked it. Yeah, Senegal is called the country of Teranga. Like hospitality is
yeah,
what we are known for. So
yes,
that's
yeah,
wonderful.
yeah. I had a great time. So wow, well, welcome, welcome, welcome to Financial Fridays.
Thank
Um,
you.
yeah. So how long have you? 10 years you've been doing mortgages, or has it been longer?
Right. So about 10 years, but I've been in the bank industry for over like 15 years. So initially I was working in the bank, personal banker. Yeah, I just did my way up, and then finally, uh, 10 years ago, I jumped into mortgages. At that time, was doing refinance purchases and all that. So, but now, more concentrating more in purchases and especially first time home buyer.
Awesome, awesome. And how long have you been with Columbia Bank?
Yeah, so Columbia Bank, I've been with Columbia for about 6 months
Okay.
because prior to that I lived in Pennsylvania, more so in the Bucks County area. So
Hmm.
that's where I was. Then I came to New Jersey. So since they service most of the South Jersey area, because that's where the bank is more concentrated, Jersey and some parts in PA
Hmm.
and New York. So yeah, I joined Columbia about 6 months ago.
Wow, nice,
Yeah.
nice. I Columbia's been a partner with South Jersey NARAB, National Association of Real Estate Brokers, and it's
Yes.
been a really great relationship so far. So I'm really, really excited
Yeah.
about the information that you're going to share today. So you
Absolutely.
have CRA,
Mhm.
and a lot of people don't know what CRA stands for and what that means. Can you share a little bit about that?
Yes, CRA is the Community Reinvestment Act. So generally deals with low to mid um, income areas where we are trying to get uh, people to be homeowners generally. But so we do most of our loans in those areas
Mhm.
just to help people, get into home ownership. By doing so, we have grants available and different requirements that makes it a little bit easy for, someone who doesn't have maybe 20% down to put down or a lot of savings to be able to purchase a home. Because we know that it's just kind of there's a big gap there, so we're trying to bridge that gap and make it possible for anybody who's willing to be able to become a homeowner.
Awesome. So talk a little bit about just an overstroke on the programs that Columbia offers, and then we'll get into the grants and the requirements.
Gotcha. Yeah. So Colombia has. I feel like not just because I work here, but it definitely has like a wonderful program, CRA program, and first time home buyer. So currently, uh, just let me make sure we do mortgages, all over Jersey. You don't necessarily just have to be a first time home buyer, but the one that I am, I guess, specialized or that I work more is we have our advancing access program. It's like actually two programs that we have. So there's one we call advancing access, and just the other one called affordable housing program.
Okay.
So, still targeting affordable housing, low to mid, or if you're making 80% of the median income.
Mhm.
And that varies depending on the counties that you live in, the median income, and where we have specific counties though that we do for CRA. So if I just take the South Jersey area, for example, we do Camden, Gloucester, and Burlington. right? And there's other counties though. I can't. I just
Right.
have
Can't
to look
name
it
all of
up.
them. There are
Yeah.
quite a few counties in New
Right,
Jersey,
right.
but
That we do. So
right.
that's one
Give people
program
an
that we
idea.
have, and then we have the other program called Advancing Access, that is still low to mid, but then more targeting more an area that is majority Black or Hispanic, because
Okay.
as we know, and I think we kind of talked about this, the
Yeah.
gap that is existing, especially home ownership gap, especially in the, like it's bad enough in all the United States, but specifically in New Jersey. So there's definitely this big gap that, you know, our bank, Columbia Bank, and other banks are also trying to fill just to
Mhm.
make it more leveled up, more even. So we
Level
have our advancing access program, so
Got
that is more majority Black or Hispanic. That is the target for that.
the focus. Yeah.
The
It's
focus for that.
interesting you talk about the United States. So for Hispanics and Black
Mhm.
home ownership rates are under 50% for Blacks and Hispanics, and for um, the majority, I think, is around 70, closer to 80% home
Yes.
ownership rates. And as we all know, home ownership is the gateway to wealth.
So
So,
absolutely.
yeah,
Yeah.
it's the way the majority of people achieve wealth
Hmm.
in the United States. So you can have lots of things in your portfolio, but you have to have real estate in your portfolio to kind of
Hmm.
jump into that wealth gap. And so
Yeah.
the fact that the government is really spending resources to
Hmm.
ensure that the percentage comes up. I think a lot of times our millennials and some of the other younger people don't want to purchase homes.
That's true.
They may
Yes.
not want to live in the homes that their parents had, or they just don't want to purchase. They want, they feel more comfortable renting. And what's interesting, you
Hmm.
actually get more space as a renter sometimes than you do. So
Yes, it's
the
true.
the
Yes.
thought is they come into a home and they're like, oh, the rooms are smaller, but because in
Hmm.
an apartment they're made for more people to live
More
in a
people.
smaller space. So,
Absolutely.
so the
Yeah.
bedrooms are a lot of times a lot larger, and then when
Hmm.
you come into a home, it's more like each person might have their own room, so there's not as much sharing going on. So the
True.
rooms are not as large,
Hmm.
or they don't want the overhead or whatever. Or a lot of times, and to the point we're going to be speaking to today,
Hmm.
sometimes it's just difficult for people to be
To
able
get.
to save um,
Hmm.
20% to
Right.
purchase a home. Home prices are higher than they've been in the last
Ever.
2 years, and they're
Yes. Yeah.
still rising. It's slowed
It is.
down a little bit,
Hmm.
but they're still
Yes.
rising. And if you look at a 30-year trend, real estate does this, but it
Hmm.
essentially goes up. It's probably one of the better investments for long-term holds
Absolutely.
that
Yes.
a person can get into. So for those of you out there who are listening, who are not currently um, homeowners, this is an
Hmm.
opportunity for you as a first-time home buyer. And when we say first-time home buyer, we mean anyone who has not been on title in the last 3 years. So you
Right.
could have
Yes.
owned a home before, but if you are currently not on title anywhere, you're not on someone's deed, um, whether you're sharing that deed with someone else, like let's say you're on the deed for your parents' house,
Hmm.
um, or with another person, if you're not on deed and you haven't been on deed for 3 years, you could participate in the first time homebuyer programs that we're going to be talking about
Hmm.
today. Um, can
And
you?
that's a very important point that you just made there, because sometimes people be like, yeah, I don't own a home. Then you pull the record, you realize that yes, they are, in fact, on title, and therefore they will have to wait, to be eligible for that, the program for first time home buyer. So
Yeah,
that's very important to know that.
yeah. I was talking to someone. We did an expo, and I was talking to a person who came up, and they were saying, you know, they were on title with a family member.
Hmm.
And I said, oh, wow, well, you can't qualify then for any of um, the grant funds
Mhm.
that I was talking about on that particular day. So I
Yeah.
said you'd have to come off a title and then wait 3 years
Wait 3 years. Yeah,
before you
exactly.
be able to
Hmm.
do it. But the fact that you're on title, there's some other options that I talked to them about for
You're
their
right.
particular situation.
Hmm.
But it's the other thing I want you to kind of talk about a little bit. So people don't really know what low to mod means. When sometimes when people think low income, a number might pop into their head, but kind of what is a healthy range for a low to moderate income? And are we talking about salary income when you say low to mod?
Yes, so generally, so okay, so there's the laundromat that is on a census tract.
Okay.
So there's a government site that we typically go. So every property has like a tracking information, census, uh, population or income. And then on the census tract, typically it's low, moderate, middle, or upper. So, we determine that by, looking at the site. It's called the FFIEC geocoding. We go there and then you can see the low to mod as far as census tract. Now, then we look at the income. So each county is a little bit different, and it will tell you there, what income we go by. So
Mhm.
generally, because I just been doing a lot in the South Jersey area, and
Mhm.
it's in my head. So 80% of the median income is definitely like it's like the household income generally.
Okay.
So, or depending on a few type of requirements. So, let's say you're doing the loan
Mhm.
by yourself, then we look at your income, like just the average income that you make. Then 80% of that will
Mhm.
be what we use. So, in the Camden County, South Jersey, typically,
Mhm.
if it hasn't changed, the annual income that's 80% would be like 95,000 and some change.
Mhm.
So that's what we look at
Mhm.
as
Right.
far as mhm.
Right. So that's a nice little chunk of change.
Yes,
So
yes,
sometimes people think low, they might think, oh, 20 or 40 or 50, but 95,000. And that's just for one person. So if you have multiple people in the household, that number goes up.
yes. So the total. So
Right.
there's what we're looking at for the mortgage to qualify.
Mhm.
Because sometimes you may be a couple, but then for whatever reason, only one person will be on
Mhm.
the application.
Mhm.
So there is a point where we will need to count the total household income. That
Mhm.
is when we're talking about grant that you will need to get. So that requires the household income, and there's different requirement level of income that you need to meet, right? So that's something separate. But
Right.
as far as someone who's doing the application, then
Mhm.
yes, we look at the income, your earned income, and
Right.
then we'll see, we can determine, where do you fall within the total income. So
Right. And
someone,
it's 80% or 80% of the total income. So
right, the 80% of the total income.
right. So if they're making 95,000, 80% of that would be a different number. So
Oh, I'm sorry. So if so no, the 80% is determined on the I guess the FFIEC or the government side. So we go by the 80% of what they have there.
ah,
So when you look at the track, there
mhm,
is like 100% income, which is maybe about
mhm,
119,000. In
mhm,
order for you to qualify as
mhm,
for income low to mod, it has to be 80% of that, which is 95,000 for the household income. So if you make, you know, as long as you make less than 95, it's you are good. So
okay.
as someone, let's say, you make 45,000 annually
Mhm,
pre-tax, you are still within range
right,
to qualify for some of those. But
got
now, if you like a couple is doing it and they are over that 80%, which is 95,000, then they may not be. There's other things that we will look at to see whether you will be eligible for that or not.
Gotcha, gotcha. So
Mhm.
basically, a person would come in, either an individual, a couple, or if there's multiple people, adults in the household, you would look
Mhm.
at um, the total income of that household and see where they fit on that chart. And as long as the income is below for the number of people and
That,
what's on your chart, then they would qualify, and you could
yes,
tell from that.
yes,
Gotcha.
yes. You got it.
And which program they would be in, the affordable housing. Distinguish between the affordable house, putting someone in the affordable housing program, and the advanced, what was it called?
Yeah, the advancing access.
Advancing access. Thank
Hmm.
you.
Right. So we pretty much is we're looking at the same criteria, but however, in the advancing access, we look at the population because we were talking about earlier, kind of bridging the gap, and then, for the majority of Black or Hispanic. So
Mhm,
this program is more geared towards that.
mhm,
So there is, when you go to the census tract, you will see, okay, so I'm looking at this particular property in this area, maybe number of household is like 27,000,
mhm,
2,700. But
mhm.
then, there's maybe 900 blacks, maybe 1,200 Hispanic. So as long as when we do our calculation and it's over 50%,
Mhm,
then that area qualifies for
mhm.
advancing access, because then we determine that it is majority black or Hispanic.
Gotcha. So it's
Mhm.
geographic area and ethnicity of the client, basically.
Right, yes.
Those two.
So it's not to say that only, black or Hispanic will be eligible
Mhm,
for that area, but
mhm.
that's how we made the calculation to determine whether it
Got-
is advancing access or not.
Gotcha.
Then this area is, you looking at that, that's one part, but then the other part that we look at is also income. Income comes into play here.
For everything.
Yeah, but with everything. But with this one, there's more leeway because you can go up to 120%
Gotcha.
of the actual income in
Yeah.
the area, because it will tell you, for example, here, the 100% income limit is, let's say 120, but we
Mhm,
can go 120% above that,
mhm.
meaning that, generally most people qualifies though
Gotcha.
for that, yes.
Gotcha. That's great. That's really,
Mhm.
really great. So, what are some of the other requirements of a buyer for particular this particular loan? Like, what type of credit score do they need to have? What debt to income, targets are
Mhm.
you using? That kind of stuff.
Right. So, again, it definitely works towards helping people for sure. So the requirement, which I really liked, because sometimes you see people struggling really with their credit.
Mhm,
Sometimes it's just things that happen, in life, or sometimes it's just, not knowing, and then you realize, okay, I'm ready to purchase, but oh my God, what, I wasn't taking these things so seriously back then.
mhm.
Now it's coming back to hunt me.
Yeah.
But so we definitely work with, that a little bit. So the credit requirement, the minimum credit score is 580,
Okay.
right? So, all these things that I'm saying may is subject to change, but as of now, that's what it is. So 580. But then again, we, look at credit history and things like that, because you can even have, like, for example, a 620, but
Mhm.
things that's on your credit are not that great.
Yeah.
The underwriter would need to have a lot of explanation. Whereas you
Mhm.
can just have a 580, and just because of high balance or things like that. So we also look at the credit history, your activities, and things like that. And typically, if I can make suggestion, I will tell you, you need to do this or that. Although I'm not a credit analyst, I'm just, sharing ideas, and it did help a lot of people that I've been working with. But anyway, so the requirement for the credit is 580. So when we talk about now DTI, that's the debt to income ratio,
Mhm.
essentially, which means that is, your monthly liabilities versus your monthly income. That's how we determine what the ratio is. So with that, it's more a little bit restrictive. We're looking at a 43%
Mhm.
on that.
Gotcha. I like one of the things that you said because, again, I was at this expo and one of the people came up to me and said, COVID was horrible for me.
Yeah.
Before COVID, excellent credit. COVID happened
Hmm.
and that 2-year period wiped me out. And now everything is back on track, but I still have that,
Those things
two,
behind,
2-year
yeah.
period that I'm building back from.
Hmm.
So now everything is good, but if they look at me post COVID and right now I'm good, but that period in between is just really horrible. And,
Hmm.
it takes a minute to kind of build your score back up from
Right.
a thing. So I think it's good that you shared that the underwriters actually take the opportunity to look at the total picture and allow for explanation. And I think that's one of the things that scares people too, because,
Hmm.
you can get sick that will, could potentially impact
Yeah.
your credit
Ability
score
to repay, yes. Hmm.
for a period of time, or
Hmm.
some other life event can happen. And I think people think, oh, I'm doomed forever.
Hmm.
Well, no, you're not. If you're showing, you know, some consistent history about doing things, there's an opportunity to explain things that may be glitches in your
That's true.
normal behavior. Now,
Yeah,
if you typically don't pay your bills on time, well, no, we're
that's
not
something
talking
else.
about you.
Yeah, that's true. Yes. No, those things, they do happen. Life happens. A lot of
Yeah.
things, sickness you go through, things that, dealing
Yes,
with
somebody
someone
dies and you have a
is
grief
right.
period.
Yeah, exactly.
You don't open your
So,
mail for 2 months.
no, I'm telling you, there's a lot of things that if I get, you're right. If you are just not paying because you don't feel like paying, then it will be hard to kind of assist you. And we can see that on the credit. People think that when you look at credit, it doesn't tell a lot. It tells a lot. So so credit wise, but I will say to most people, because I definitely deal with a lot of people. For some reason they just don't know, or they just assume, okay, so there's no way I can get a mortgage, because I cannot tell you how many times I talk to clients, and then we're on credit. I'm doing the pre-qualification, and they're like, "Oh, Mariama, I just want to see, but I'm pretty sure I'm not gonna, get this." So they already have in their mind that they are not going to be, approved. And then I said, what I want to say is just give it a try, right? So because you don't know whether you will be eligible or not. So if you're thinking about purchasing, even if because I honestly, I keep repeating this because I've seen so many people thinking that they are not, they're like, no, I cannot qualify. But then I said, okay, you may not be ready today, but
Right.
if you take the steps, right? So
Yeah.
you're looking at your credit and we're like, okay, you definitely need to work on this. Then
Mhm.
you give yourself an action plan.
Yeah,
So in within 6 months, because time goes by like
it
this,
does.
and then the more you wait, the more you in a rental situation paying someone else's mortgage. There's a
Yeah.
lot of things that you can be proactive. So I said, okay, if you're not ready for this present time, right? But then you take actions, small steps, because that pays, and within the next 6 months, even if it takes a year for you to be where you need to be, the end goal is for you to purchase your home. And then you really can buy a house, no
And
matter what situation you are in. It's just a matter of having this mindset and being prepared, and then sometimes it takes sacrifices, but if you want something, you just take it one step at a time. Then you'll be able to get it done.
right, indeed. And I think a lot of times people too who are renting, rents are going up.
Oh my, yes,
Yeah,
yes.
and there was a person who showed one of my properties and they were like, "Oh, I don't want my payment to be over X a month."
Hmm.
And the for the property would have been maybe about $200 more. And I'm like, they don't get it. One, you can write off some of that on the back end, but two,
Right.
your rents are going to just keep going up and your note is going to be stable. It's going to be set at that. make
Yeah.
some adjustments in your spending, you
Mm-hmm.
know, another $200 a month is doable, based on
Yes.
the income and what the other things that you've got going on. So sometimes I think people don't think the long term; they're just thinking right now.
The sure, yes. And then you think about all the things that you can do when you own your home and the equity that you can do with it. I think that's one part that a lot of people are missing. Yeah, so initially, yes, you want to be able to,
Make the payment.
yeah, get your home, but then you think about what, like, because it's an investment purchasing a home, like it really is. It's like you have your business and then you can, invest in a business so you can get money out. If you have children, you pay for, the tuition, or
Yeah,
if you want to purchase another home, you can do that. There's a lot of things that you can do with your, it's not like you just purchase the home, you pay and that's it. So
right.
no, it can bring you a lot of things along the way.
Over time,
Over
yeah.
time,
I
yes.
said the house is the bank.
Yeah,
The house,
exactly.
the house can become the bank.
Absolutely,
Initially
absolutely.
you're paying the bank, and then ultimately you can be your own bank.
Yes, definitely.
if you
Yes.
you know if you do things in order, in a proper
Hmm.
way and in order. So yeah,
Yeah.
it's one of the best investments I think I've ever made, in life.
Hmm. I
In life,
agree.
and so it's, you can't convince someone. It has to be something that you want to do. You see the value,
Hmm.
and you can get with Miss Baldy to assist you with the programs. Oh, we haven't talked about the grant programs. So talk
Oh,
a little bit
right.
about that, and some of the discounts that Columbia offers that are available as well.
Yes, absolutely. So, speaking of the advancing access, that's the one with majority Black or Hispanic. So that comes with 10,000 grant, right? So
Okay.
far, so subject to change, but right now that's what we have. We talked about the credit score, generally discounted uh, rate. So it depends on, because I can really give a fixed rate. It all
Mhm.
depends, but it's a discounted rate, definitely lower than what's on the market generally. No mortgage insurance, so generally you have to have a 20% down in order to not pay mortgage insurance. So with this program, 3% is the minimum required, but then you get the 10,000 grant. So no mortgage insurance. Most of the closing fees are waived, which I love because it's a lot of savings as well. So you can save anywhere depending on the purchase price, anywhere from 3 to 5,000 in closing costs. So for example, appraisal fees waive, credit report is waived, a
Yeah.
few other things, and also title. So title is waived, but
Uh-huh.
you have to use our title company, right?
Mhm.
So that's just a part, but it is waived.
Mhm.
Yeah, a whole
That's that's a
lot
nice
of
little
things.
chunk of change.
No, yeah, absolutely,
I mean,
absolutely.
PMI alone could be almost $5,000 or more, depending on the purchase price of the home. Yeah.
Right, definitely,
Yeah.
exactly,
So
exactly.
this is
So
good.
when you look at it, so with that program, yes, so you got your 10,000, and it doesn't necessarily just have to be towards the down payment. It can be used towards the closing costs as well.
And
So
and so for the advanced program, do you have to be a first time home buyer for that program?
yes, so most of the year you have to be a first time home buyer.
Okay.
Yes, so in order to enjoy those wonderful, wonderful, although we have other programs, if you're not a first-time home buyer, we can always, find you something that may work for you as well.
Okay.
But these are what we have for the advancing access. Now, it can also be combined with county grants. So let's say, I don't know, you're looking to purchase in Newark or Camden, so they have county grants that you can layer on top. There's also, we work a lot with the federal home loan grants. That's about the 19,005. that's being offered. So that and can also be layered on top of that. So a lot of eligible grant that you have, we may be able to layer it
Hmm.
with that program. Now, the affordable housing grant, that's just, we call it our regular CRA.
Uh-huh.
Uh, right now, the available grant that we have is 5,000 that can be used towards the down payment as well as the closing costs. And, more information on our website, columbiabankonline.com. So for that. But it also comes with, the low credit score, no mortgage insurance, title waive, and all those other things. Most of those closing costs being waived.
That's pretty impressive. Pretty
Mm-hmm.
impressive because closing costs can add up, and then if you have some grant money
Right,
on top
exactly.
of that, and you can stack the other grant programs with it,
Yes,
that really lowers that entry barrier so that people
absolutely.
can do it because that's typically what it is. People don't have enough money up
Mm-hmm.
front, or credit. I want to go back to credit for a minute
Mm-hmm.
because I get this question a lot. People
Okay.
are afraid when they're shopping their loan.
Mm-hmm.
You're like, oh, this person's going to pull my credit and that person's going to pull my credit.
Mm-hmm.
And if your credit is pretty stable, it's not a big deal. If you're right at five, you know,
The,
whatever,
yeah, yeah, the 590s, though, yeah, that areas. Yeah. I know. So, but most banks, though, really 620 is what they are
yeah,
looking at,
or
right?
640,
So,
some of them.
yeah, yeah, exactly. Yeah, so 640 for most of them.
Mhm.
So, yeah, if your score is kind of borderline, you want to be very careful. And I
Mhm.
mean, it's because it's good to shop around, for sure. I advise my clients to do that because sometimes also it gives you like a competitive edge sometimes, but you want to be very careful at like what time you want to be
The timing, that's
shopping
really,
around. Yeah, the time frame is very important because
yeah,
you don't want to come to Colombia and have me pull your credit and then you wait 30 days later, you go to another bank and then kind of doing it like that, it
no,
may definitely
the
hurt you,
time frame
especially.
like this.
Right, exactly, exactly.
Yeah, yeah. I think if you do it, I tell people 2 weeks. They'll
Mhm.
count it one time because they realize that you're shopping your loan, and so they
Right, yeah. So they realize that, yeah, you are shopping around, so they are lenient on the credit bureaus. They know that. So you just want to kind of, yeah,
Mhm.
2 weeks. I think they actually give you a, more of a, maybe I think the new requirement, the new thing is now 30 days. But yes, so you shopping around two
Mhm.
weeks, contact the lenders, and then that you want to work with. I will say no more than three. Don't
Yeah,
go like shopping for 10 lenders because
no,
pretty much, honestly, yes, I do want to have people come to Colombia, work with me.
mhm.
But we generally, most of us have the same kind of program. But, sometimes it varies. There's a slight change, but I think Columbia program is the best out there. Just
Yeah,
just
it's a
because,
great. It
especially when
really
we're
is.
talking about closing costs. Because I honestly I work with a few other lenders, right? So we say CRA, but it's not really like a true CRA. And I feel like honestly this is a good CRA program. So if you think about all the closing costs that you will be saving, the no PMI, because it makes a difference on your monthly payment.
It does.
Yes.
Yeah, it does. It really,
Mhm.
really does. I appreciate all of the information that you shared today. Is there
Absolutely.
something else that you want to share with the listeners? Either about programs at Columbia, it could be first time homebuyers, could be something else, or about the home buying process in general.
Oh, I just forgot to mention, typically most of these program will require for the borrower to at least have, if all goes well, at least 1,000 from their own funds, right? So,
Perfect.
because I what I typically find is, people calling me, we talk. So how much saving do you have? I have nothing. So that I hear that a lot. I'm like, okay, so
I'm
you have
gonna
to,
I'm gonna piggyback on that. You
yeah,
know, 1,000 to 3,000 because there are
yes,
other costs associated with buying the home that are going to bump you up into about the $2,000 range. So,
yes, you're right. So you have to have also, there's things that are outside of, on my end. So for example, you need to pay for your inspection. There
right.
are other things. So you need some sort of a small amount, and also reserve. Reserve is very important, and that's something that most people forget about. Like
Mm,
by reserve, I mean the reserve requirement. It differs from bank to bank, but for our program, at least 2 months. So it means that whatever your mortgage payment is, you
mhm.
need 2 months of that in whether in a savings
Saved,
account,
right?
or you
Somewhere.
can use your 401k or whatever. It's not money that you will need to put into the transaction, but it just shows that, okay, in case something happened, and you cannot make the payment, right, you have some sort of a backup for at least 2 months in order to get back on your feet. So, but
Awesome.
yeah, but other than that, this definitely wonderful programs that Columbia Bank has.
This this
So,
this is great. This is great. So people can get if they qualify for either of the two programs, they
mhm,
can get anywhere from 5,000 to $10,000 down payment assistance. They could also get um, a reduction or elimination of most of their closing costs, which is
mhm,
phenomenal.
yes,
They need to have at least 2 months of reserves for which would be whatever their new mortgage payment is saved somewhere, and
right,
then they need to have at least $1,000 of upfront money saved, and you can go to a 580 credit
credit
score
score,
on
yes,
either of the programs or
on
just one,
either, no, either of the program.
either of the programs. So
Hmm.
this is a really great thing. It's through the Community Reinvestment Act, which
Yes.
is a way that the government is giving back or investing in communities
Hmm.
that have been underserved in the homeownership area. So if you fall into this area, I would just really recommend that you reach out to Miss Balde and take advantage of it while it exists.
Yes, yes.
Because all programs won't exist
They
forever.
don't last. They don't last forever.
They don't last forever, so take
That's true.
advantage while they do. And how do people contact you?
So you can go to Columbia Bank online, um, .com. So my information is listed there,
Okay.
or my I can be reached at MBALDE at
Mhm.
columbiabankonline.com.
Awesome.
And you can always give me a call as well, 215-237-0023.
Awesome. Awesome.
Yeah.
Well, I
So
want to,
whenever you are, thinking of uh, purchasing, whether you are ready to, get under contract, or you are looking maybe in the next year or so, and you feel like you're not where you need to be, just have a conversation with either me or someone that can put you on the right path.
awesome. Well, I appreciate you taking the time today, Ms. Baldy, to share this information with our listeners. If you have any questions, you can drop them in the chat. Most definitely reach out to Ms. Baldy at Columbia Bank so that she can assist you personally.
Yes.
And here at Lions View Realty, we make sure that you have the resources, the information, and tips to make the best financial decisions because we want to increase your wealth building power, not only now, but in the future. So I'm really excited about all of the programs. At Lions View Realty, we have ESP, we call it our ESP, the expertise, the solutions, and patience before, during, and after the sale. We assist sellers and buyers and investors to build wealth and real estate professionals to build careers in real estate. And I know y'all always hear me talking about the Lions View lifestyle. What is that? So, the Lions View lifestyle is when you actualize your dreams into reality. You want to be a homeowner, you can be a homeowner. It's the possibility of what is available when your life is in order, when your finances are in order, when your health is in order, and when your spiritual mindset is in order. Then you'll have a Lions View lifestyle. You can look out over your kingdom, and everything that you imagine to be is there and available for you. So here at Financial Fridays, we air every Friday at 9:30 a.m. Eastern Standard Time. We hope to see you back next Friday, or you can share this video with other people. Go to the site on YouTube at Clara Lyons-DeVaughn and see other information about different ways that you can build wealth in your life. But until then, my name is Clara Lyons-DeVaughn, and we want you to keep living your best, your best life. Thank you so much. Thank you, Miss Balde.
Thank you, Clara. Thank you. I appreciate it.